Okay, so the question says Kingdom is a publicly listed manufacturing entity. Its draft summarized financial statements for the year end 30th September 2023 and 20x2, which are comparatives, are statements of profit and loss and the comprehensive income. You're given a revenue which has increased very slightly. Cost of sales have increased a lot. Gross profit has decreased as a result. Distribution costs have increased. Admin expenses have increased. Investment properties rentals received and fair value changes. All right, so this is rental received. All right, remember this. So this makes part of investing activities. We'll just cater it later on. You have fair value changes, a negative fair value change of 700, whereas a positive change in the previous year. Finance costs are the same. Profit before taxation has decreased significantly. Income tax, profit for the year, other comprehensive income shows a loss, and total comprehensive income. Assets increased, investment property decreased, inventories decreased, trade receivables decreased, bank, you had a positive $300,000 in your account. Now it's negative. You have a overdraft of 200,000, which shows in the current liability area, right? Equity has changed because there is probably a issue of shares, revaluation surplus, retained earnings, 12% loan notes, trade payables, accrued finance costs, bank and current tax payable. All right. Requirement is prepare the statement of cash flows. That is fine. And B is explain the cause of the fall in Kingdom's profit before tax. All right. So that's pretty much easy. It's not that difficult, right? On 1st July 2023, Kingdom acquired a new investment property at a cost of $1.4 million. On this date, it also transferred one of its other investment properties to property, plant, and equipment at its fair value of $1.6 million. Remember, this transfer does not have any cash implication, but it will be this figure will be required or used to calculate your cash purchases, right? As it became owner occupied on that date, Kingdom adopts a fair value model for its investment properties. Kingdom also has a policy of revaluing its other properties included as PPE to market value at the date of each year. The comprehensive income and revaluation surplus both relate to these properties. All right. Revaluation surplus has decreased by 1,300, by the way, which reflects in the current year other comprehensive income. All right. So you can gauge it through this method. So there's a decrease of 1,300. Okay. That means probably there's no transfer of excess depreciation because we've tied the figures now. Depreciation of property, plant, and equipment during the year was $1.5 million. An item of plant with a carrying amount of $2.3 million was sold for $1.8 million during September 2023. So that is the only adjustment you have, right? So you can easily work out the figures. Probably the two T accounts that we need to make are PPE and your
interest payable,
investment property. So this, let's just call it working one, and let's call it working two. This T account, this is investment property, and this is PPE. Okay, I'll first start my work with PPE. PPE has a balance opening of 25,200 and closing of
26,700.
All right.
Yeah.
And there's a transfer of 1,600, right?
Yeah.
Now this, remember, this account is for your carrying value. All right. There's no separation between cost and cumulative depreciation. All right. There was a downward revaluation of 1300. All right. What else? 1300 downward
Depres-
revaluation. Yes, depreciation.
Depreciation.
Yeah.
Depreciation of how much?
Depreciation also is there, no? It's like 1.5 million.
1.5. Anything else?
No.
Mm,
No sale. No. No.
disposal. Yes.
No revaluation.
Disposal.
Disposal is
Disposal.
there.
Disposed
Disposal
is
is
it?
there.
Yeah.
With a carrying amount of 2300.
2.3 million. Yeah.
So that's it. Purchases.
Hmm.
Sorry, sum of this side minus sum of this side. So 5,000 purchases. You need to
Investment
deduct.
minus from investment. Investment.
All right, IP. Balance at start for IP was 5,000.
Yeah.
Carried forward balance was 4,100.
4,100. Yeah.
Transfer
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 1,600.
was 1,600. Remember, there's no depreciation when you carry your
Acquired.
IP at fair value
Yeah.
model, right?
And acquisition is there, no? 1,400.
Yeah, we're coming to that. Additions of 1,400. Additions of 1,400. Right, and loss on fair value. Loss on fair value was 700. I forgot one more thing.
Loss on fair
PP
value 700 means?
over here. Okay.
Okay. 700.
Let me just complete the PP area, or let's just complete this and then I'll move back to PP. There's certain things that I didn't put in. I didn't mark those certain things. So obviously you have loss on fair value, which will it be added? Guys,
Operating.
Operating
Activity.
yes, operating activities. All right, and the additions will be what? Deducted.
Deducting from,
Yeah. Cash out. No. Yeah.
Yes,
from
Investment.
investment. This over here needs to be added back
Yeah.
in operating activities. And as for the disposal, the dispose, let's make a double entry, bank debit 1.8.
So loss on disposal will be there.
Yep, PP credit
2.3.
2.3.
2.3 and balance loss on disposal. That
Loss
will
on
be
disposal.
added back.
All right. So these two figures bold. This you need to add in investing.
Yes.
And this you need to add in operating.
Operating activity.
All right.
Yeah.
All right. So anything else? Let me check. These are the only adjustments that we have. It's a pretty simple question, but obviously we need to work out the shares. Let me see. Finance cost. Remember, there is no thing related to finance cost. Nothing related to finance cost. Yes. No, you have accrued finance cost. All right. So you'll have to make a T account for finance cost as well. Okay. How will you do that?
Opening is
That is
there, no?
finance
Accrued
cost.
finance cost is there.
Yes.
Accrued
So
finance cost 50.
I'll just copy it down. So you need it for two things. From what I can see right now is accrued finance and taxation. So accrued finance cost, which is your interest, and taxation. So this is your working 3. and this over here is your working for. Since it's accrued,
Mm.
the balance will be on the credit side. 50 closing is 100, right?
Yeah.
Mm.
Interest during the year
During the
600.
600. 600.
That was a nice song, by the way. All right, just kidding. All right, so you added back in what? Operating activities, right?
Mm.
And cash paid, sorry. Uh, paid. Paid is this plus this minus. So that's 550 paid. Deduct from operating activities. Okay.
Okay.
Taxation, you have a liability.
Yeah.
Income tax expense is how much? 600. All right. So your
1850.
liability, any deferred tax? No.
No, no, no.
So taxation is 1850 and 500, right?
1850. Yeah.
1850. Income tax expense
Mine is
is
like
600.
600. Yeah. Minus
So
500.
tax expense is ex, expense is 600 and your closing is
500.
500.
500.
Balance
So
is
your
tax paid.
paid is this plus.
1800 plus. Yeah. Minus 500. 1950.
All right. Anything else? Yes,
No.
shares.
Shares is there.
So
Equity.
your opening equity
Equity of
was
15,000.
15.
15,000. Your closing equity was 17,200.
17,200.
That means you issued shares worth how much?
Of 200.
Issue of shares against cash, obviously.
2,200.
Then
Yeah.
premium.
There's no premium because we don't
Less.
see a premium account.
No, no. Yeah.
There's no
Nothing,
premium, all
nothing.
right?
Not. Yeah, no.
I think there is
So,
a calculation for returned earnings also.
yes, add in
Activity.
financing. All right, so working six is what?
Returned earnings.
Retained earnings.
Opening retained earnings at 8,700.
1,700.
Yeah.
Profit
For
1,800.
you.
Add
profit was 1,800.
1,800.
1,800. Closing.
Plus closing.
There is
Closing
no
is
transfer of revaluation reserve to retained earning. All right, we've tied the balance of
yeah.
we've tied the change in balance of revaluation reserve.
Mm.
Closing is what?
7,000.
7,700.
So 2,800 is your dividends
Okay.
paid.
Great.
Okay. Is anyone watching football?
No.
No.
The whistle sounded like someone's watching football.
Because
That's
no,
there's a
in my
final time
home the
whistle.
kids are
All right.
running, playing.
Okay. That's good. All right. So current liability is 12% loan note. There's no change in the loan note. All right. Bank, we know. Trade receivables, we know how to work it. Inventory, we know. We've done with investment properties. We've done with PPE. We've done with finance cost, investment properties. Rental received will be taken to investing activities, like I mentioned. So make sure investing activities. All right.
Hmm.
Remove it from here. All right, and will be taken to investing activities.
Investment. Yeah.
That's it. All right. So
Hmm.
Yeah.
this is it for Kingdom. Obviously, you need to make your uh, cash flow statement
Cash
after
flow
this.
statement.